Welcome to our daily financial deep dive. Today is Monday, February 23rd, 2026. If you've been watching the charts this morning, you know the atmosphere in the global markets isn't just tense, it is electric. We are standing at a historic crossroads. For decades, the 50,000-point mark on the Dow Jones was a myth, a number of the distant future. Last week, it became a reality. But as the opening bell rings today, that milestone feels less like a trophy and more like a cliff's edge. In today's broadcast, we are breaking down why the latest economic shocks are sending ripples through Silicon Valley, why Bitcoin is forming a massive pressure cooker pattern at $67,000, and most importantly, we will explore 3 dramatic scenarios that could redefine your net worth by the end of this month. If you are running a high-performance setup for your data analysis, stay tuned. The numbers are moving faster than the news can keep up. Let us look at the hard numbers. The Dow Jones Industrial Average closed its last session struggling at 49,359 points. The psychological blow of slipping back under the 50,000 mark cannot be overstated. We are witnessing what many experts call a bull trap of epic proportions. While the S&P 500 is hovering at 6,940, the tech-heavy Nasdaq is fighting to stay above 23,515. The primary culprit behind this sudden chill on Wall Street is uncertainty. The latest executive orders regarding a 15% universal tariff on all imports have effectively blindsided the global supply chain. While the administration argues this will bring manufacturing back to American soil, investors are terrified of a sudden sharp spike in inflation. We're seeing a massive rotation out of consumer stocks and a frantic move into defensive technology. However, even the AI giants are not safe. The market is beginning to realize that the $650 billion AI arms race is hitting a physical wall, specifically the soaring cost of energy and infrastructure. If you cannot power the chips cannot generate profit. Now, let us pivot to the king of cryptocurrency. Bitcoin is currently coiled like a spring between $67,300 and $67,600. Despite the chaos in traditional stocks, Bitcoin is exhibiting a level of structural resilience that has caught even seasoned veterans off guard. While the Dow bleeds, Bitcoin is holding its ground. On-chainData reveals a staggering trend where exchange balances have hit a 10-year low. This is not retail panic selling. This is massive institutional accumulation. Rumors are circulating from Washington to Dubai that the United States is moving closer to establishing a strategic Bitcoin reserve to hedge against a national debt that is now ballooning toward $36 trillion. At the current price level, Bitcoin is essentially in a supply shock zone. The next major move will not be a crawl, it will likely be a vertical leap. The question is no longer if we hit $100,000, but rather who will be left holding the bag when the door slams shut for retail entry. To understand where we are going, we must look at the hypothetical black swans that could change everything. Let us consider 3 dramatic scenarios for the final days of February. In the first scenario, imagine if the new tariffs trigger a retaliatory trade war with Europe and Asia. Inflation jumps to 8% almost overnight, and the Federal Reserve finds itself paralyzed. In this world, the Dow crashes toward 40,000 points, but Bitcoin decouples entirely from the stock market. It becomes the ultimate lifeboat for global capital, skyrocketing to $150,000 as investors flee the collapsing value of paper currency. The second scenario involves the AI infrastructure itself. What if the top AI providers are forced to suspend services to certain regions due to these new economic barriers? Global logistics, banking, and even power grids that are now managed by artificial intelligence could grind to a halt. In this state of chaos, decentralized networks become the only way for the economy to function. The value of local high-performance computing power, the kind of hardware many of you are running in your own homes, would suddenly become more valuable than gold. Finally, consider the geopolitical flashpoint. With major naval assets moving into the Mediterranean, any small skirmish could send oil prices toward $150 a barrel. Gold, which is already testing $5,000 an ounce, would blast past $6,000 in a heartbeat. In a world on the brink of conflict, Bitcoin and gold would become the only 2 trusted languages of value. We are living through a period of high-frequency history. The old rules of buying and holding are being rewritten by AI algorithms and rapid geopolitical shifts. Your strategy for 2026 must be as adaptive as the models we study. Watch this $65,000 level on Bitcoin very closely. It is the floor of the new digital world. Keep an eye on the 10-year Treasury yield, because if it continues to spike, the Dow's 50,000-point dream is over for the foreseeable future. We are currently using our own high thread count systems to crunch the latest sentiment data and whale movements. The market moves fast, but with the right data, you can move faster. Stay sharp, stay hedged, and prepare for the volatility ahead.